What's up, everybody? Jerry with Dividend Trading back for another video. We're going to be talking about ticker symbol ATER or Aterian Incorporated. Just going to give you guys kind of a recap on the day, where I think this thing could run for the rest of the week, or actually, excuse me, tomorrow, because we only got one day left. Forgot what day it was. And then kind of what I forecast for the next couple of trading days after that. So, but before we get started, don't forget to hit that like and that subscribe button down at the bottom of the window. Let's get this thing rolling. Okay, so Aterian on the day finished at $12 even, down $4.72 or 28.23% on the intraday, and then the after hours was down another 16 cents or 1.33% and finished the after hours at $11.84. Here, let me show you guys what I'm looking at. So I'm looking specifically right in this area here, in the top right corner. Now, I know it's probably pretty frustrating for anyone that had got in, around this area and kind of wrote it up and didn't sell because they thought it was going to continue to run. It happens. I've been in situations like that too, where I've gotten kind of in the middle because I thought momentum was going to continue and then it didn't, and then I had to end up averaging myself down. It actually happened to me in this area. I got in at 11 bucks, wrote it to 19 and held on, and then ended up dropping down to like 17 or so. And that was when I sold the first time. And then when we hit bottom at 11 bucks, I got in again, but then it dipped down to 9. So I had to average myself all the way back down and then ride the way back up again. So it's just one of those things where that's why it's important that you don't throw all of your money in at one time. You want to make sure you have some dry powder left, that way you can average yourself down in the event that the stock continues to dip. But in terms of the dip itself today, yeah, we had a massive drop down. I mean, $4.72 on the intraday, almost 30% drop, just basically from the last day. However, I mean, we ran up, let's see, it was 9.15 up to 18.79. So we ran up almost 100% over the last over the last 4 trading days, only to have a 30% regression. I mean, we're still net 70% over the last 5 days. That's a win. Most stocks in a year don't climb that much and don't give you that much in terms of gain. So, yeah, I mean, it happens. Just stay convicted in the play. It's not done. I'm telling you, it's not done. And I'm about to show you again why. So this little zone right here, so this is what I'm referencing. So you notice how similar the stair step up is. Stair step up right here, and then a sell off down, right? Sell off down, and then we have a little bit of a cup forming here. So we pretty much were in this area today. Tomorrow, I think we could have, we might have a little bit of a green day, or it might be kind of a net neutral day, just based on if we continue to follow this trend. So ideally, if we kind of come up this way and then we do have a dip back down, we could potentially get back to that $10 range or so, potentially. Again, this is hypothetically if it's going to follow the same trend that it did previously when we ran up to 1990. Okay, so then after that point, and this took about 3 days for us to get through. So I'm kind of forecasting that same kind of movement, except I'm doing 2 days here and then another 2, potentially 3 days there, so a total of 5 days roughly that I could see this thing maybe stretching out to, and then a stair step back up. So ideally, if we do continue this, I mean, if it's kind of a rinse and repeat scenario until it ultimately does have a squeeze and these shorts are continuing to increase their position, I mean, why not? Why not make money and then potentially take some off the top and then buy back in on the dip to continue to maximize your position? Now, if you're doing it with a few hundred shares, with the amount of what the free float is, it's not going to be that drastic. I mean, because we're talking about, with the way the price is right now, I mean, most people are probably holding, I don't know, 300-400 shares, give or take at the most. There's probably a few out there that probably have somewhere in a couple of thousand, give or take, but I doubt that it's very many. But again, I could be wrong, but that's neither here nor there. I do think that eventually, so if you take a look at the MACD, so we're already kind of in this curve where we start here and then we converge. So that's what I was saying. It wouldn't surprise me if we might have a little bit of a green day tomorrow, because if we do curve up here and we actually do converge across that signal line, we could see potentially, kind of like a pick-me-up kind of day tomorrow, which would be good. It'd be a good time to end the week. But, if it's something where, we get a ton of buyers stepping in and that momentum plays and we're able to ride this thing up, even better. So I am going to jump over to Ortex now real quick, just to kind of give you guys kind of an update on there. So, sorry, let me switch from AMC. So Ethereum. So Ethereum on the day, up almost 3.5%. So we had 281,000 return versus 779,000 borrowed against, for a net borrow change of 497,000 on the day. The current shortage to the free float, 55.17%. Cost to borrow minimum, 109.92%. Substantial. Cost to borrow max, 250%. So that hasn't changed. Cost to borrow average, 187.31%. That number is incredible. The amount of the short interest to the free float that's currently short is incredible. It's stuff that you don't typically see with these plays. Now, also, if you guys haven't also seen, Ethereum and both Ethereum and BBIG were placed on the squeeze potential list. I think Ethereum's number 1 and BBIG's number 2 or 3. So they're in the top 5. Both of these tickers are. So it's definitely something to keep in mind. Definitely something to keep an eye on, especially going into the next few trading days and even the next few weeks. So like I said, it's not done by any means, especially with the way that the MACD is looking, and we've already bounced off the RSI. I'm not really expecting anything less than where we're at right now. Again, I mean, I would be shocked and dumbfounded if this thing ran all the way back down to the $9 range. I don't foresee that happening. Now, again, that's not a guarantee. I honestly think worst case, if we follow this same pattern, we could see a trend down into that $10 range again and then bounce from there, which would be fine. That will give people that potentially missed out on the first opportunity to step back in, and also anyone that bought, around this $14 range and up, the ability to average themselves down and increase their cost basis. So let me continue with this right here. So utilization still maxed out, 99.5%. Cost to borrow, 121.8 over the last 7 days. Days to cover, 0.79. Shares on loan still down roughly 6%. Free float still roughly down 6%. The exchange reported short interest is up 15.67%. So these numbers here up top haven't really changed all that much, from the last 2 or 3 days. So again, nothing really substantial to note on that end here. So again, ideally, if we can run up, we need to break that $14.07 or $14 range. After that, we need to break $15.22, and then let's see, what is this? $15.22, and then let's call it $16.30. $16.30, and then $16.47, and after that, we're looking at $18. $18.60, because I think it's where, or $18.85, or around $18.85 is where we rejected before. So again, if we can get 14 and then break through all the way to 16, we should see 18 again. But if we don't, and we continue to follow this trend like we did previously, I would expect something along and with around this range here. So that way you guys aren't really surprised. That's why I kind of like to do both sides of the coin. That way you guys kind of know what to expect, both in a good case and a bad case. So otherwise, that'll pretty much wrap it up for this one, and I will see you guys on the next one. Peace.